Welcome to The Explainer. Today we're looking at a business where literally every single second counts and the stakes absolutely could not be higher. We're talking about express logistics. Just imagine having to guarantee the movement of thousands of tons of critical cargo across this vast, incredibly complex geography, all while you're dealing with unpredictable weather, constantly shifting regulations, and global geopolitical shocks. Honestly, it sounds like a logistical nightmare, right? But for South Asia's premier express air and integrated transportation company, Blue Dart, well, that's just a Tuesday. Today, we're unpacking the exact mechanisms they use to manage risk and maintain total stability under immense pressure.
Okay, let's dive into this. The big question we're exploring today is how a massive delivery network doesn't just survive external shocks and internal complexities, but actually manages to thrive despite them. In an industry that is practically defined by continuous disruption, a single bottleneck can trigger a massive chain reaction. So, how exactly does Blue Dart build a fortress around its operations?
Now, before we get into the how, we really need to establish that they actually pull this off. And the ultimate scorecard for their success comes straight from India Ratings and Research, which has affirmed Blue Dart Express with an IND AA+ stable rating for their long-term issuer rating in bank loan facilities. In the world of corporate finance, especially in a highly volatile sector like this, a rating like that is a massive stamp of credibility. It basically tells us for sure that their defense mechanisms are working beautifully. To understand exactly how they achieved that pristine rating, we're going to break down their strategy into 5 distinct pillars of defense. We have navigating a challenging landscape, strict financial discipline, operational and network resilience, managing external regulatory risks, and lastly, the ultimate parent advantage. Let's start with Section 1, navigating a challenging landscape. So the express logistics business comes with this massive built-in vulnerability, which is high operating leverage. Basically, what that means is you have these huge fixed costs, maintaining the planes, the massive facilities, paying a huge workforce, and you have to pay those regardless of how many packages you're actually shipping on any given day. If volume drops, poof, profits vanish instantly. Blue Dart mitigates this inherent risk by relentlessly expanding its scale of operations. By pushing more and more volume through their existing infrastructure, they improve their fixed cost absorption. Growth isn't just about making more money for them, it's a fundamental risk management tool. For anyone investing in or relying on these services, understanding this dynamic explains exactly why they push so hard for market share. It's quite literally their armor.
Which brings us to Section 2, strict financial discipline. We actually have concrete proof of their stability right in the numbers. Just consider the massive jump in their quarterly revenue from operations. They went from roughly 1,442 crores in Q1 of FY26 up to an impressive 1,658 crore in Q1 of FY27. And alongside that awesome revenue growth, they posted a profit after tax of roughly 87 crore for the quarter. This highlights some incredibly disciplined execution, allowing them to absorb higher operating costs in a really tough external environment without sacrificing the bottom line at all.
But hey, it's not just about what they earn, right? It's really about what they don't owe. Blue Dart maintains a remarkably clean balance sheet. They hold virtually zero external debt, and they use their working capital limits incredibly minimally. Because of this strong coverage and leverage ratio, they project very comfortable EBITDA margins of 15 to 17% over the next 2 to 3 years. They aren't overextended. That means when economic shocks inevitably hit, whether that's impacting consumer spending or shaking up supply chains, they have the financial padding to just absorb the blow without passing any of that panic onto their customers.
Moving on to Section 3, operational and network resilience.
Of course, financial health is only half the battle. You can have the best balance sheet in the world, but if your planes aren't flying, you're out of business. So how do they physically safeguard operations? It boils down to a pretty incredible combination. They have their own dedicated aviation assets on one side and the absolute powerhouse of the Blue Dart and DHL co-branding on the other. And this isn't just a marketing gimmick. As part of DHL Group's e-commerce division, Blue Dart gets to plug into the most comprehensive logistics network worldwide, covering over 220 countries and territories. This synergistic integration between their own domestic capacity and DHL's massive global reach creates a huge buffer against any localized disruptions. When you put those assets together, you're talking about sheer massive physical scale. They are actively covering over 56,400 locations across India alone. To pull this off, their wholly owned subsidiary Blue Dart Aviation operates 6 Boeing 757-200s and 2 Boeing 737-800s, all driven by a super dedicated workforce of over 14,600 employees. When you have that level of redundant capacity and deeply tech-enabled reach, a breakdown in one specific route or one facility just doesn't crash the system.
The network dynamically reroutes and absorbs the impact. For you as a consumer, that literally just means your package still arrives on time, even if a storm takes out one of their hubs. I really think the words of Managing Director Balfour Manuel hit the nail on the head here. He noted that despite a challenging operating environment and higher operating costs, their performance totally reflects focused execution, disciplined network management, and continued customer confidence. It really humanizes the corporate strategy. At the end of the day, having 56,400 locations means absolutely nothing if you don't have the disciplined execution to actually manage them reliably.
Which brings us to Section 4, Managing External Regulatory Risks.
You see, true risk management isn't just about getting a box delivered. It's about strict compliance in a constantly shifting legal and environmental landscape. This is all about navigating moving targets. Blue Dart proactively adapts to these major regulatory shifts. They've seamlessly handled the implementation of the new wage code and labor frameworks. They've upgraded to stringent new security standards, even achieving the ISO IEC 27001-2022 certification. And on the ESG front, they are proactively pledging to the UNFCCC CNN commitment to hit some very ambitious CO2 reduction targets. They are literally future-proofing the entire company against regulatory crackdowns and environmental penalties.
And then there's the question of what happens when a massive global crisis hits. Take the disruptions caused by the West Asia crisis, for example, which created real discrepancies on the shipping side of things. During their earnings call, management noted that because they are such a nimble entity, they maintain the flexibility to deploy specialized charter options if specific opportunities or needs pop up, much like they did post-COVID. They are constantly monitoring geopolitical risks and keeping specialized assets in reserve, ready to deploy the second the market demands it.
Finally, let's wrap up with Section 5, the ultimate parent advantage. Now, if absolutely every other pillar of defense were to somehow fail, say the macro environment completely collapsed or operations ground to a halt, they still have this final massive safety net. India Ratings explicitly factors into their assessment the distress support that is potentially available to Blue Dart from its ultimate parent company, Deutsche Post AG. And Deutsche Post AG boasts a phenomenal A/stable rating by Fitch Ratings. That deep synergistic backing pretty much ensures that Blue Dart is insulated from terminal corporate distress. So this all brings us to one crucial final thought. We usually think of logistics companies as simply delivering boxes from point A to point B. But when you really stop and look at their massive scale, their incredibly strict financial discipline, their agile regulatory compliance, and that powerhouse corporate backing, you kind of have to wonder, in an industry that is entirely built on constant, unpredictable disruption, is the physical delivery just a byproduct? Is proactive risk management and unwavering stability actually the ultimate product Blue Dart is selling us? It is definitely a fascinating way to look at the business of moving things. Thanks so much for joining me on this explainer, and I really hope this gives you a whole new perspective on the invisible architecture of global logistics.